dreams. Have you ever thinking about that and take a time to make a picture about what is your dream? What do you want to achieve in your life? So I want you to answer this question as an icebreaker right now, and it's just a yes or no. If you have, and sometimes we can not just draw, or we can get a picture in the internet or in a magazine or somewhere. Have you ever done something like this? So please put in the chat box if you are shy. If you're not, open your mic and then answer yes or no.
Yes, I did a while ago, but I did.
Good. Thank you, Carmen.
I usually write more than draw, though. I write what I would like to achieve, but I did a little picture too.
Thank you. Someone else? Ah, Lucy says no, and Mario says yes. Ah, good to know. While we're responding and then we're answering this question, I'm trying to share my screen. Go ahead, guys.
This is Mario. One time, what I did was you write your own eulogy or your own epitaph. So it kind of forces you to visualize what you want to accomplish in life.
Very interesting. This is another question that we can use for a further icebreaker. I like it. Thank you, Mario. We have with us tonight 80 entrepreneurs, and just 3 of them have answered. Someone else, please. Yes, Daisy, thank you. She says yes. Is Fish not coming tonight? I'm not seeing Fish. Hi, Lucinda. You are Fish? You might saying yes. Ah, and Lucinda is saying that she's Fish. Okay, so Lucinda, I'm sorry. Next time I'll call you from your name, using your name. So, do you have any time in your life take a paper? You took a paper, or you have a piece of a magazine or something that is about your dreams?
Sorry, I took long to answer. My internet is a little choppy, so I didn't hear your question. But no, I don't think I've ever done that. I think about my future, but I've never written it down or anything.
Okay, thank you, Lucinda. And thank you for the feedback about the internet. If I get frozen, please let me know. Okay, Juan is saying yes, and Donna only in my head. Right. So good, guys. And Helen, no. We have 50-50. Some of you have done this exercise before and some never did. Okay, so I'm here tonight to spend just 30 minutes with you, so I'm going to be very brief. And we are going to start the first step about new economy. This is something about mindset, to open your minds and think about, do you remember when we were talking about impact, when we started the Model C Canvas? And impact was something that was so uh, different from the idea of having a business. So we are going to work with this conception, not only with impact, but how we can understand ourselves, our mindset, throughout our journey as entrepreneurs in this world where we are right now. So we are going to have 4 different sessions. This one tonight is the first one. Then we are going to have another one about this next month, and then next month, and then in July we are going to wrap up these sessions talking about impact. That's why I'm saying that impact is what I'm targeting, but we are going to make a pathway to get there. So tonight we are going to have an introduction about this. Sorry. And we are going to talk about what is VUCA and bunny world. In next session, we are going to talk about circular economy and donut economy, and then fair trade. Okay, so these are information that you can, if you have the idea to Google it, you can go ahead and Google it. And we are going to share some of these concepts to think about our mindset as entrepreneurs in the next sessions. Okay, so new economy. The term new economy is linked to the emergence in our lives of information and communication technologies. We call these communication technologies ICTs. These technologies are lots of types of technologies, Facebook, these Teams, YouTube, the smartphone and all that apps and other types of technologies that we use in our computers, notebooks, and elsewhere when we are talking about how to work with some type of improvements in our work and how to get it with some new approach, technological approach, okay? So every day, new technologies are generating operational change in our world as persons and in our business. So it's going to open new opportunities and is redefining the benefits for their users. Sorry. We are affected by these transitions, and so is your business, you as an entrepreneur. So the entrepreneur, as the leader of her business, must seek to understand the world around him, her, and look for the best way to act when making decisions. Because these ICTs are going to impact your decisions as well. For example, we must launch efforts to make ICTs our allies to scale up processes and for entrepreneurial networking, for example, right? So when we are going to talk about new economy, I want you to think about this mindset that everything is changing. We have new opportunities every day. So tonight we are going to start talking about word VUCA and word bunny. Both VUCA and bunny offer us frameworks. We can use it to decode what is happening around us and cope with external events. Both VUCA and bunny are acronyms. Both describe frameworks for business strategy and leadership. So what is VUCA? VUCA is volatile, uncertain, complex, and ambiguous. It's a framework to understand what's happening around us, okay? So I'm going to try to share with you a brief, yeah, it's going to work. This is a brief video that's going to talk about VUCA world, okay? Please pay attention. I've tried to put some captions in Spanish. I know that some of our incubatees are more comfortable talking in Spanish, but I'm not. I'm sorry about that. My apologies. But you are going to have this material available for you as the video available for you in the Google Classroom, and then you can see it using these captions in Spanish if they are not going to work right now. Okay, so let's see this small video. Okay, guys. For those who have had problems with the connection or have problems to see the video, I'm going to place the link or the video in your group, in your Telegram group. Okay, then you can watch it in YouTube when you are available for that, and afterwards it's going to be uploaded to the classroom. But what we want to show you with this video, with this vocal world, is that changes are coming every time for everyone, for any type of entrepreneur and any type of different locations and situations. So we need to start thinking that we want to handle all these transformations, but sometimes we are going to get into some uncertainties and a lot of complexities that are going not to be we are not going to be able to handle all of this, but we want to go through this process all the time. So when we are trying to forecast, and we are going to see it in the other thematic areas, when we are going to talk about management, we are going to talk about marketing and finances, and all the time we are going to talk about forecasting what we want to have and where we want to get. And it's not so easy sometimes. So it's not a problem from yourself. It's something that's happening all around the world with everyone. And this complexity is getting much more, sorry about that. It's not too, yeah, now, there we go. It's getting so difficult to understand that some other specialists, the experts on this field about the future and how to work with this forecasting is the complexity. They have shaped another acronym that's BUNNY. BUNNY is an acronym that serves to describe the situation of the next generation of business. It is how can we work together in a world with climate change, with pandemics, with several other issues that we are going to face, and the technological approach that's coming at the same time. If we were asking me about this type of discussion, we should have this type of discussion face to face 2 years ago. But since the pandemic, we need to use the ICTs in favor of our work, of ourselves, of our jobs, our enterprise. Okay? So Bunny is B is for brittle, A anxious, and non-linear, I incompressible. Right? So to get to the next point, we are going to understand what they want to express with this information. So brittle is to shatter, subjected to a total and sudden failure anytime. So failure is part of the process. When we get some fail, we need to move in another direction and make it happen with some kind of new approach. Anxious is fear that any choice we can make might be the wrong one. So we have a lot of possibilities, but we can't be sure that we are going to get in the end of finish what we want. So we get anxious. This is something that is getting for all of us, all of the entrepreneurs around the world. Nonlinear is a disconnection between cause and effect in time, proportion, and perception. So sometimes we are going to make A to get to B, but what we are seeing that sometimes we have been done A in a traditional way for our lives, doing our farming or doing our jobs on or making our products, but we can't get to the same level of profitability on the same situation we had before. So we need to think about this and think how to handle this type of issue. Incomprehensible is extremely difficult to understand. So this is the type of situation that we are going to face all over your business, all of your next months, and until you get some certainties and be more comfortable with your choices. So don't give up. Just remind this. We were in a VUCA world that was complex, ambiguous, that volatile, but now we're in a situation that is much harder, that is a bunny world. So the next slide is going to share with you some of qualities that an entrepreneur would have and is useful to have when developing your strategy for your entrepreneurship. Sorry. So when we are talking about brittleness, the brittleness requires capacity and resilience. So you need to be resilient and have your technologies and your products and your efficacy you are going to work on it, right? Anxiety asks for empathy and mindfulness. Empathy with who? Empathy with your stakeholders, all of stakeholders, internal stakeholders that are the persons that are working with you every day, and external stakeholders that are all of that guys that are from your value chain, from the government, and from the partnerships, and all of these type of stakeholders. Okay, so remember that empathy may be anxiety in a situation that express anxiety, and you need to handle that, and the opposite is true as well. Non-linearity calls for context and adaptivity, so you need to understand the context. When the changes are coming, then you're going to think about what's changing and how to work with this. And incomprehensibility demands transparency and intuition. So it's not easy to talk about intuition, but I know that that feeling about an entrepreneur has that feeling about marketing. So it's about this type of intuition that we're talking about. And transparency is how to work with your reliable honesty every day. Okay, so this is the content that I have to share with you. It's about a mindset. It's very brief. And then we are going to our next phase right now to do an exercise. But before the exercise, I would like to wait for you to express your thoughts about this. And if you have any question, please open your mic, raise your hands, or just put it in the chat. I'll give you like 1 minute for that. We don't have volunteers today. Someone is writing. Good. So we are going to have some interaction. Have you ever heard about this concept, guys? Bunny and VUCA, or something similar to this?
No, this is the first time I have heard about this.
And
It's
makes
me, Andrew.
sense? And Mr. Khan, does it make sense for you?
Yes, about the canvas, yes.
So Carmen's saying that she never heard about that. Donna, no as well. And Juan is saying, to my understanding, VUCA is the ability to adapt to uncontrollable situation. Yes, that's this ability is something that we want you to raise by yourselves, that we are getting this information and putting it into the table. It's on the table to think about it. Okay, this is something that it's going to be a framework for you to think about your own situation and the world that's around you and your business. Mario saying not heard in this way. Lucinda, no. Roberto Khan, first time I hear about it. When instead of work against it, I find a way to work with it. Exactly. This is indeed, this is what we want from your side. That's why this is about mindset. Helen, never heard about. And Daisy, I haven't heard about it. I'm learning now. Good, good. So this is our idea today, that's to share with you some new concepts. Yes, Guevara, first time I heard it. Okay. So guys, let's do an exercise. It's about simplicity and adaptability. These are the beautiful words for mindset that we have tonight. Simplicity and adaptability. Okay, I requested Mr. Marine to ask you to have some material, a piece of paper, and to divide it into 4 parts. That's not 4 parts, 3 parts. We don't need 4 parts. I just get one of these questions out. We don't need 3 parts. You have, please, I would like you to have a pen, not a pencil, because I want you to share your information afterwards. So if it's going to be a pencil, maybe it's not going to be so easy to see what you have done in your personal job, okay? So any type of paper, just a sheet and a pen, please. So what is our assignment tonight? I'm going to give you 4 minutes right now, and we are going to answer these 2 questions with drawings in each frame. We are going to divide your paper into the middle. One side, the first question is A, what is the dream you want to build? You remember this is what my first question tonight. So I want you to draw something about this. You don't need to be an spectacular, you don't need to be Leonardo da Vinci, but you can use what you know to make the other persons to understand what you are going to talk about. And if you can't do this, you can write down, okay? And go ahead. And letter B, we are going to ask you, how can your stakeholders help you achieve your goals in a bunny world? How can they help you with your goals in a bunny world? So you have a dream. Your dream is connected to your entrepreneurship right now, right? And you have your stakeholders that are going to join the same dream from their perspectives, from their ends, and they can help you. How they can help you? Okay, I'm going to give you 4 minutes, okay? 4 minutes in the clock. And I want you to share afterwards what is your mindset in this case. If you have any question, please go ahead and you can open your mic or put it in the chat box. But the idea is to be very interactive, so please. Two minutes more. The time is running. 30 seconds now. Okay, it's time to share. I'm going to make it as very simple. You have 2 minutes each one to share what you have done. You can open your camera and just to put your information available for everybody, or you can take a picture and send it on Telegram. If you're going to send it on Telegram, let me know. And we are going to try to make it available on this screen, okay? So please go ahead. Who is going to volunteer? If there is no volunteers, I'm going to do as a teacher, and I'm going to call all of you. Who's the first one? Oh, we have here Yesi Guevara. I can't read it. I don't know if there is a way to make it okay. Her dream, create a product that can become a bestseller in Belize. Oh wow, I love it. And how your stakeholders are going to help you working as a team. Teamwork and hard work equal success. Ooh, thank you. Thank you so much. Go ahead, Mr. Khan. We can't hear you. Roberto Khan is sharing his screen, but we can't see. And Mr. Andy Khan is with the hand raised. So
Can I speak about? Okay. For A, what is dream you want to build? Okay. My dream is to make a warehouse and export my product, plus help the forest in deforestation. B. How can your stakeholders help you achieve your goals in a band world? By working with each other and especially communicating with each other. Is that okay?
is that very good? Thank you, Mr. Andy Khan. Thank you so much.
Okay. Thank you.
Juan placed his comments here in the chat. Let's see. For A, I will need you to inform me what are these signs. Go ahead, please.
Can you hear me?
Yes,
okay.
we can.
So for E, what is the dream you want to build? So in my point of view, I would like to build a farm, or I would say live on a farm. So on the left you have some, I would say, beds or pieces of crops. Those are some crops that like have plant. On the other side you can have a production facility and a house where you can stay and live on that farm. The goal is I would say, to be self-sustained, so you can retire yourself and live on there. You don't have to come to town or be dependent on town or any stuff. And for B, how can your stakeholders help you achieve your goals in the bunny world? So I would say in the bunny world, it's about communication. So you gotta listen to your stakeholders, not only because they're only stakeholders, you won't be putting care to them. So you gotta be there comes the Brill. You gotta listen to them, and you can maybe they have a point of view that you haven't seen on the market, and they can help you in that way. So there gotta be communication between the stakeholders.
Yes, yeah, good point. It's a very good point. Thank you, Mr. Juan. I want to request you guys to get this information that you are sharing, that this piece of paper, please give a chance to this, and we are going to improve it in the next phases, okay, the next month. So please, you keep it. Please keep it. So anyone else?
Yes, hello, good night. This is Roberto.
Hi,
Yeah,
good night, Roberto.
yes, good night. Good night, everybody, and good night. Yeah, I just wanted to share what is the dream? No, I want to, well, my business, I'm an entrepreneur in beekeeping. So I want to be a beekeeper, and I want to take my company to the next level in the country of Belize. No, I want to be a leading company in beekeeping, not only in terms of honey, but I want to do a different products from beekeeping, since it has a good potential. And how my customers would, or the stakeholders would assist me in achieving my goals is that we have to have an approach of top to bottom, and understand what the consumers are asking on the market. No, and then also we have to build on cost of production, management, finance, strategic plan as well. So that's how we have to go forward in planning the next phase of our company, and taking it to the next level.
Very
Okay,
good.
thank
Thank
you.
you very much, Mr. Khan. Okay, we are going to have time at least for one more. Helen, I'm seeing that you have placed information here. Can you share with us your information, please? Helen, are you there? No, she's not. So I'm going to try to read it for you. Okay, so A, the dream I want to build is to have my own private business factory to supply all over the country, world, and make all our customers with a happy smile, and they receive and use our product. Okay, very good. She's thinking about the world. Wow, it's a dream. Letter B, in finding sales in all over the country. Okay, sales all over the country and slash world for us can have a successful business. Yeah, very good. So she's talking about making marketing. So good. Hi, Daisy. I'm seeing yours. Go ahead, please share with us what is your dream and how you're going to achieve your goals with your stakeholders.
Well, my dream is to have a business set up more organized, because we have a business to organize it better, so that we can be able to provide quality products, since we already have a product that we're giving to out in the market. So I want to make sure we have standardized things for it to be better, and to be able to provide it throughout the whole country of Belize, because there is a demand, but as we're small, we're unable to provide a lot of products. So we have a shortage there of product to sell. So I want us to be able to expand ourselves so that we can grow and we can have, because we have customers, So we need to be able to get more customers later on, and as well get feedback from them, and as well provide jobs for other people.
And how your stakeholders are going to help you to achieve this?
Well, right now it's a family business, so we're looking into everybody contributing to provide a little bit. And one of the things that we heard that we can be able to, well, think of getting help with you guys in how to go through legal processing of establishing the business, and having others, like for example, I have somebody within the family who is more into computers, tech savvy. So that person will help into maybe designing a web page and helping design things that are tech savvy. We have another person who is more into the vocational career and is able to design building, design machinery, because some of our machinery were made by us. So we just got ideas, and then our partner, my brother, I would say, he put everything together. He does welding, carpentry, and stuff like that. So then they are working with us. And then we don't have a set worker right now because we're not properly organized. But if we organize properly, we'll be able to do that and have somebody that will be constant there working. So then we'll provide someone with a proper salary and proper benefit as a worker. And then as also, if we're properly established, the government will recognize our business.
Very good point about the government, and it's very interesting your points. Thank you very much, Daisy. So I want you to stay sharing and continue sharing those that have not shared your images in the chat box. But I need to let my colleague, Mr. Silverio Marin, to make his presentation tonight, because I'm taking a lot of time. I took just 10 minutes more than I was supposed to, but I think it was a very good moment to know all about you and to share about our different dreams that are so close and that are going to enhance the name of Belize throughout the world, right? Thank you, guys. Thank you so much. Silverio, are you there?
Hello, Inessa. Yes, I'm here. Alrighty. That was an excellent first part of tonight's presentation. So I will proceed now with the second part of tonight's activity. But before I do that, I'd like to invite you to look in the chat, and you'll find a link. So all those of you who have recently joined, you will find a link to the attendance form, and we're asking you to click on it and fill out the attendance sheet. Very well. So we will now move on to the second part of tonight's presentation. And I will be sharing my screen with you. Are you able to see my screen? Can you give me some indication, please?
Yes, we can.
Very excellent. Very well. So tonight I'm going to be talking a little bit about some financial terms that are very important for all of you to know. And these financial terms, you will see them coming up very constantly throughout the development of your small business. So Sorry, I'm having some problems with my light here. Turn it off. Very well. So we will start, and we're going to be looking at 10 terms tonight. So there's going to be 10 terms that we would want you to get to know tonight. And these terms are accrual accounting, cash accounting, profits, assets, liabilities, cash flow statements, income statements, balance sheet, inventory, and depreciation. Certainly, there are very many other terms that you would be interested in knowing. However, we think that these are some of the priority terms for you. And so we'll start by looking at the first one, which is the accrued accounting. Now, it's important for you to understand the type of accounting that you're going to carry out for your business. And as you saw from the list, there are two main accounting types. There is the accrual basis, and then there is the cash basis. And they are different, but they all have pros and cons. So you would want to understand which of the types of accounting you want to carry out before you start your bookkeeping and your accounting methodologies. So with the accrual basis accounting, this is the concept of recording the revenues when they are earned. And well, pretty much it's the revenues and the expenses that are recorded at the time that they are incurred. So what does this mean? This means that as soon as there is an expense, or as soon as there is an earning, a sale that happens, then that is immediately recorded in your accounting sheets. You will see that this is the primary difference between the two different types of accounting. So in the accrual, we use this approach because it is one that reflects the health of the organization a lot better. You will see that this is the type of accounting that is mostly requested by financial institutions. So if your business is growing, then this is the type of accounting that you would want to follow. It is um, it is not the easiest of the accounting mechanisms, simply because in this type of accounting, you have to have very good record keeping. And you would usually use the support of an accountant or someone else to be able to help you if this is not something that you manage very well. So I'll give you an example now for you to understand the type of accounting that we're talking about. So in the example here, I have that suppose that you or suppose that an appliance is being purchased on credit. Now, whenever you purchase an appliance, especially if it is a refrigerator, and you go to, let's say, the courts or to another one of these credit businesses, you don't necessarily have to pay everything up front. Now, if you don't pay everything up front, then how do we record the value of that item that is being sold? In terms of the accrual basis, you would record the sale immediately after you have signed the contract. In the other type of accounting, you would wait until the cash is coming in for you to start to making those entries into your sheets. So that is the primary difference, right? So using the accrual accounting method, the store will record the accrued revenue from the sale when the refrigerator leaves the store, right? Not at some date in the future. And I keep this in mind because you will see the key difference with the next type of accounting. The other type of accounting is cash accounting. Yes, and so this is the most commonly used type of accounting and recording for small businesses. Now, it is very easy to manage. It's something very simple, but it is um, it is not the most recommended type if you are going to start to grow your business and you will seek financing from a funding institution. So this, although it is easier to use, it is not the most recommended if you're starting to grow your business. At this point in time, when you guys have your business ideas, some of you are starting your business, it would be appropriate. It will give you that practice for you to get used to the record keeping system. But for those of you who have slightly larger businesses, then I would recommend that you stick to the Accure accounting. So the main thing with this cash accounting system is that it recognizes the revenues and expenses at the time that the cash is received or is paid out. So it is not going to take into account the contracts. It's not going to take into account the agreements. It's going to happen or it's going to be recorded whenever there is the flow of money coming in or out of the business. That is the only time when it is recorded. Now, it is helpful because it gives us a very good idea of how much money we have at hand. Right? So this is and this is especially helpful for small and starting businesses because you want to know how much money you have to be able to spend in your operations the following month or the following weeks. So that is the usefulness of this type of accounting. But as I mentioned, if you're trying to seek a loan, if you're trying to seek other funding assistance from other types of businesses, then we would recommend the Accured one. I'll give you an example here so that it becomes more clear. So in this example, we're using a tomato sauce company, and this company secures a contract to be able to supply another business. And then they have a contract that is written. And in the contract, there are specific dates that are set when payment will be made. So in the contract, for example, you can say, all right, we'll make payment every 3 months. We're going to make payment every 5 months, whatever time period they desire. Now, it does not mean that they will only supply every 3 months, but they would be probably supplying on a weekly basis. But in the cash accounting system, the cash flow is not going to be recorded until the 3 months or until the 5 months when cash is actually coming in. Nevertheless, we would still be recording all the expenses that we are incurring for the production of the tomato sauce. So all during the weeks and the months that we are supplying, we are going to be recording how much the company is spending. Now, this is what makes this type of accounting a little bit tricky, So as you'll see in the last statement there, it says if the project's time span is greater than 1 month, the company's income statements will appear misleading, as they will show that the company is incurring great or large losses in 1 month, followed by great gains maybe in the next 3 months if we're following that time period. Right, so for 3 months, you're going to just be incurring losses, and then in the third month, there's going to be this huge amount of income that is going to be recorded. And it is a little bit misleading because the reason you're producing is because you already have a contracted service. So in your accounting basis, if it is accrued, then from the start, you would record that there is an amount of cash that is to be coming in, and that would then justify and would talk about the healthiness of your business. No? Very well. We move on to another term that we have tonight. And this other term is one that we all like very much. And this is profit. So what exactly is profit? Well, as it's stated in the slide there, it says profit is an amount of money that you gain when you are paid more for something than it cost you to make, get, or do it. So it is that difference between what you have spent in producing a product or delivering a service and what you're actually being paid. That is what is going to define your profit. So it is the value remaining after the company's expenses have been paid. Now, whenever you are comparing how much you earned and how much you've spent to provide that service, if that difference is positive, then you've earned a profit. But if you spent more than what you've sold the product for, then you would have incurred a loss. Now, there are different types of profits or different levels of profits that are recorded in an income statement. And these are gross profit, operating profit, and net profit. No? These are elements that you will be able to recognize in an income statement whenever you see one. And so what is gross profit? So gross profit is the value that remains after the cost of sales or cost of goods sold has been deducted from the sales revenue. So whatever you were paid for minus whatever it cost you to produce, that is your gross profit. Now, operating profit includes another element or another layer of expenses. So operating profit is the value that remains after the operating expenses have been deducted from the revenue. So apart from the cost of goods or how much it costs you to produce the product, you're going to include then operating expenses. These could include things like marketing, could be advertising, it could be employees' salaries, it could be their different benefits, their social security payments. There is other things like rent, not that are other expenses that the company would incur. And so when you add this type of expense and you subtract it from the general revenue that has come in, then you obtain the operating profit, right? So it's a different level of profit that is recorded, and it has an additional layer of expenses. And then we have the net profit, which is another type of profit that is recorded in income statements. And that one includes other types of expenses, such as interest and taxes that the company would have to pay, right? These are really not tangible expenses, right? So you're not getting anything in return for them. It's just general interest or taxes that are recorded. And that is when you get your net profit. Net profit is also known as net income or net earnings. So I'll show you now an example of an income statement and how these would be reflected in such a statement. But before we look at this chart, we're going to see the graph. You'll see the graph here where it has the revenue in orange And you see that if you subtract the cost of goods from the revenue, you end up with the gross profit. Now, if you add the operating expenses to the cost of goods, you will then end up with the operating profit. No? And if to the operating profit you remove the interest and taxes, then you end up with the net profit. And you'll see generally how the net profit tends to be smaller than the overall revenue that you're getting. No? But you're accounting for all the expenses that are incurred throughout the period of time. So if you look at the actual income statement here, you'll see how the revenue is recorded. There is the sales that happen, and that gives you the total revenue. And then if you subtract how much it costs you to produce those items that were sold, then you end up with your gross profit. And the gross profit, if you subtract the operating expenses in the different categories of expenses that you might have, you will end up with the operating profit. Now that operating profit, if you remove the interest income and the expenses, then you are going to end up with the net income after expenses, which is your net profit. Right? And this is generally how you would be able to see or how you would be able to find these different profits reflected in an income statement. Of course, you will have an opportunity for you to develop your own income statements as we go along in the incubation process. The other term that is very important for you to know is assets. No, this is something that I guess most of you are familiar with, and is a very important term that we should all know when we're dealing with finances. So, what are assets, you might ask? Well, the assets are items that you own that can provide future benefit to your business. These could be things like cash, it could be inventory, it could be real estate, it could be even equipment, no? And it could also be anything that you have been, anything that you're owed, no? So accounts receivable. So anything that is pending that you for you to be paid can also be included as assets. There are different types of assets. There are two main types. There are the current assets, and then there are the fixed assets. And the way that we distinguish these current and fixed assets is based on the time period for us to be able to cash them. So for current assets, these are any assets that you can actually liquidate within 1 year. So current assets are things that are very easy for you to turn into actual cash. And the time period for that is a year. For assets that have a longer time period for you to turn them into cash, then those we term as fixed assets. So generally, from that list of examples that I gave you, if you consider real estate would be one of those fixed assets because it generally takes a bit longer for you to turn that asset into cash, for you to sell that asset. And so they are usually termed as fixed assets. And they are usually tangible assets. So in this case, we would not use the account receivable as fixed assets. Very well. The other term that we have for tonight is liabilities. Yeah? We have liabilities. This is another very important term. And liabilities, in essence, is really the opposite of assets. Yeah? So liabilities are what you owe other parties. So assets are those things that you have and that you own, while liabilities are everything that you actually owe. And these could be things like debt that you might have to the bank or to whomever is funding you. Sometimes your family, your friends tend to fund you. And so whatever funds you have to return would be classified as liabilities. There are things like wages, monies that are due to different uh, resource suppliers would also be known as liabilities. Anything that you could consider accounts payable, as the term says it, anything that you have to pay for, that you have outstanding to pay, would be a liability. There are also different types of liabilities. We have current liabilities and we have long-term liabilities. And like with assets, the current liabilities are whatever liabilities are due within or within the current year. These are things that you would have to pay in the next months or so. While long-term liabilities are those obligations that you have that are for a longer period of time than that of a year. So if you maybe are building a factory and you made a loan and you have 10 or 15 years to pay back that loan, then that would be termed as a long-term liability. Any questions up to now?
Silverio, Mr. Mario Lara has made a question here in the chat box. May I read it?
Yes.
Okay. If starting a farm from scratch, it will take a while before you earn revenue. Do you have a template for farm business? Second question, how do you track assets for a farm which include trees of various varieties?
Oh, that is a very interesting question, yes. So the trees would be valued along with the land, right? So it would be pretty much the land value that we would use as the asset. No, and that is how it is going to be recorded. So we won't be recording the trees themselves, but rather the plot.
He's giving an example right now. For example, if you buy a tree for 20 and plant it, but it takes 5 years before it grows and produce, how do you value that? May I help you on this?
Yes, go ahead, Ines.
Several industries like that one that plant eucalyptus for getting paper in the end of their production, they have these trees. These trees are a stock. So this is going to be part of your assets, but it's not a fixed, totally fixed asset, but is a fixed asset because it's going to provide you your revenue just 5 years in the future. Okay, so when you are going to write it down, you are going to break up it into categories, and these trees in this case are going to be like the eucalyptus that are going to be profitable afterwards when they are cropped uh, or their fruits are going to be able to sell and so on. Okay. I'm not sure if it's clear, but go ahead, Silverio. It's your turn.
Thank you, Inessa. Yeah, I think well, I'm not sure if that answers Mario's question. Yeah, he says thanks. That helps. Yes, very well. All right, excellent, Inessa. Thank you very much for that. And yeah, so we were. Let me ask: is there any other question with regards to the different terms that we've seen up to now? Very well. Well, if there's no other questions at the moment, then let's proceed. The other term that we have to look at tonight is the cash flow statement. Yes, the cash flow statement. I think many of you would have heard about this term. The cash flow, before we look at the statement, now we have to understand what cash flow actually is. And cash flow describes the relationship between cash entering and cash leaving the business. No? So it is the flow of cash um, coming in and going out from the business. There is positive cash flow, which means that more cash is entering a business than what is leaving. So you also tend to have negative cash flow, which would be the opposite, no? When you are spending more in a given time period. A lot of people get worried when they have negative cash flows. But if I use that example that Mario has left, you will also recognize that there is investment, no, that is happening, and so you would tend to see that in the initial years or initial period for production, you will have primarily a negative cash flow because you are investing, no, you're putting a lot of money into the business, and so that has to be recorded. And then later on, you will see the positive cash flow come into effect when you're going to start to generate a lot more income than what you're actually spending during those specific time periods. Now, I have a note there on poor cash flow management because that is one of the key things for you to recognize that if you do not or you're not aware of the cash flow mechanism, then you might get into trouble. If you're spending more and you do not have forecasted where the extra money that you're spending is going to come from, then you might be finding yourself in some serious problems that you will not be able to meet the different liabilities that you would have. Right? So now, what is a cash flow statement? Well, a cash flow statement is essentially one of those, or is a type of financial statement that is prepared to provide a detailed analysis of what happens to a company's cash during a given period of time. It is very important for you to understand that this is the period of time is important. Cash flow can be measured for a month, could be for a year, and it could be also between years. But you have to define what period it is that you're actually generating the flow of cash for. I have here a little image of what um, a monthly cash flow would look like, and you would see generally how this is recorded. Now, this takes into consideration the cash that is coming in, right? And you will see the cash that is going out. So there's total cash inflow and there is total cash outflow. And this will give you a good idea of how much money you would have at hand. So in this example, in January, you will see that the total cash inflow was $22,000, while the total cash flow was $32,000. That means that the net cash flow, that means that there was a difference of $10,000 that was spent over that amount that was actually generated. So that gives us a negative cash flow, right? But this is because it could be that it is investments that are taking place, that you're putting money into the business, and so you would see that you're spending more than what you're actually earning. Now, at the end of January, you would have that closing balance. And so that would be that negative $10,000 being recorded as your closing balance there. Very important for you to know is that the opening balance for the next month will be that same figure as the closing balance of the previous month. This should always be the case. Yes. So you're closing a month and you say, okay, this is the amount of money that I have at hand. It could be, in this case, it is money that has been out of the company, and now that will be the same figure that you will put as your opening balance for the next month. Alrighty, and you go about doing the same exercise for the next month. This is how you generate that forecast, and this is something that you will also be doing for your small businesses, because you would want to see um, when when you have those months that you expect to maybe sell more, or maybe those months that you might be spending more than what you're actually going to be selling, and you have to be prepared. You have to know when it is that you will require more money than what you would actually have at hand. And those are the periods when maybe you would seek to have some sort of financial assistance coming in, maybe through a short period loan, um, or some other mechanism that would help you to manage those extra expenses. There are going to be maybe weeks when you will notice that you have to have more materials for you to then put out the products that you would need because of maybe the season that is in. Then when you have those extra expenses that you don't have the cash for, then you seek that assistance. You could even then do contracts with your suppliers so that they would give you credit. That is also another way for you to manage those extra expenses that you would have in specific months. Very well. The next term that we would want you to know is income statement, right? And so the income statement is another type of financial statement that summarizes a business's income and expense during a given period of time. Yeah? Again, it is over a period of time, and we must specify, we must have clear indication of what that period of time actually is. Now, this income statement is also known as profit and loss. Now, I think that many of you would have heard of this term before. So we have a profit and loss, which is the same thing as an income statement. Here we have an example of income statement, and you will see that in the first area there, it asks you to define the period that you're reporting on, right? And this is very important because you have to, to understand what time period you're talking about, because every month is different. Yeah, and every month you will see that the income statement will be different. And so you want to have that very clearly defined. So in terms of the income statement, the first thing that you record is the sales. Yeah, that is the income that you're generating, the earnings. And so you have the sales that are recorded, and then you will see that there is the cost of goods, right? You'll remember from the previous example that we have the total revenue and then we have the operating expenses, right? It's the same type of income statement that we're dealing with here. So we have the sales, we have the different types of, you would have here the different types of income that you're generating, and then you would have the different types of expenses that are directly related to those products that you've sold or services that you've provided. Yeah? And then that would give you your gross profit. Then you also have all your list of expenses, the different types of expenses that you would have, and these would be the operating expenses, and it could also be the interest expenses and your taxes expenses. No, that would be defined for that specific period, and then that gives you an overview of the profitability of your company during that specific period. So this is an example of the profit and loss statement or the income statement. Alrighty. The other term that we have to look at tonight, I'm sorry with regards to the intensity, no, I know that it's a lot of terms that we have to know, but remember that we have this information available for you so that you can review it also in other time periods. Very well. The next term is the balance sheet. And so the balance sheet is another type of financial statement that communicates an organization's overall worth, right? So this is what you would know as the book value of your company, right? I guess you would have heard people talking about the book value or the value of your company. Then you get those figures by carrying out the exercise of putting together the balance sheet. Now, the balance sheet includes a tally of the organization's assets and liabilities and equity for a given reporting period. Yes, so the balance sheets are arranged according to the following equations. These are that assets are equivalent to those liabilities and the owner's equity. Yeah? And so I have an example here of what a balance sheet looks like. So you have your assets and you have your liabilities. Yes. Along with those liabilities, we have the equity. Yeah. That we have in terms of investments that maybe the different owners, maybe your partners, maybe the different members would have done on the company. No, this is cash that they would have invested in the company. And then you also have the return earnings that these would be finances that would be generated by the company, but would be reinvested in the company, right? And then of course you already know the different types of assets and the different types of liabilities that we have. And the total liabilities and owner's equity, there's a little formula here that says that there is the total assets is equivalent to the liabilities, L, total liabilities, plus the total owner's equity, which is E. Right, so this is an example, and you'll see that the different terms that we're looking at are useful in building these different statements, right? It's for you to understand what each of those elements within these sheets actually represent. And of course, when you're doing during the mentorship, you're going to have the opportunity, if you're interested, to put together these statements. Very well. Another term that is very important for us to understand is inventory. Now, inventory is generally known as the raw materials that are used to produce goods that we would sell, right? And so we would use this term generally as defining those end products. But it is important for us to understand that there are different types of inventories. Yeah? So there is raw materials, there is what is known as work in progress inventory, and then there is the finished goods. I'm going to talk about these three in a little while. But important for you to know is that you have to have good management of your inventory, because this is actually going to define how much product you're actually able to put out in the market. And it is also going to let you know the different investment requirements that you would need for you to then be able to put out those products in the market, right? So we have different types of inventories. As I had mentioned before, we have raw materials, and these raw materials are generally what we would have before we actually produce the product, right? So the raw materials are all those inputs that you would require for you to actually produce a product. Then you have a work in progress inventory. Now, work in progress are all those products that are currently being developed, right? So if you have an example of the production of tomato sauce, if you have tomatoes that are already chopped and diced and are ready to be processed, then that is a work in progress inventory. Yes, if you are producing maybe ice cream and you already have the milk and you have the milk already churning in the machines, when you're doing your inventory check, you would say, all right, this is work in progress inventory, right? So it is in the line of production already. And then we have the finished goods inventory, which would be after the processing has already occurred, right? So this is the products that are ready to be placed in the market. And so those are the three different types of inventory that we utilize. And then we have the term depreciation. This is something that we also think is very beneficial for you to understand. So depreciation is the decrease in the value of assets over its useful lifespan. This is a term that I have found that a lot of small businesses have difficulty in accounting for. Usually, the small businesses, whenever they're purchasing an equipment, they would record that expense for that particular time that they have paid out for the equipment. And then you would see that you end up with a huge negative cash flow because you would have expended a lot during that particular time. No, if it is in a month, then you would see that that month has a huge expense because equipment was purchased. But if you consider the lifespan of this specific asset, then that would help you to actually improve your income and cash flow statements. It would be reflected as a more healthy system in that you would have only that specific value of that asset being accounted for that specific period, right? So if you have a piece of equipment that lasts 10 years, that you have a lifespan of 10 years, then you would divide the value of that equipment over that 10-year period, right? And of course, you also have to take into account how much you would be able to sell it after that 10-year period for. So you use those values to then end up with the value that you would account for on a monthly or a yearly basis of depreciation. So as it's stated there, it says it is the cost allocated amongst the period in which the asset is expected to be used, right? So in that example of the 10-year period. Now, there are also different types of depreciation methods, but the easiest one for small businesses and the one that I would recommend for you to use would be the straight line depreciation method, right? And this is one where you have the purchase price of the asset, that is how much you're paying for at the start, minus the salvage value. The salvage value is that amount of money for which you're able to sell the asset in whatever period of time. No? If it is a 10 years, after the 10 years, how much would you be able to sell it for? And then you divide that value by the estimated useful life of the asset. And then I have an example there. So if you want to buy a computer server, $5,000, based on past experience, you have a 3-year lifespan and a salvage value of $200. So that after 3 years, you're going to be able to sell this asset for $200. So you will subtract the $200 from the 5,000 that you had initially invested, and you divide that by 3, and so that you have the depreciation value of $1,600 on a yearly basis. No? So every year, that is the depreciation value that you would add as an expense in your sheets. No? Very well. So that is the end of my presentation for tonight with the 10 different terms that we think are important for you to know whenever you are starting a business. Any questions at this point in time? I want to remind everyone that we want you to also sign the sign-up sheet. So please do so that we can record your attendance. Very well, I see Andy has his hand raised. Yes, Andy, go ahead.
Good night, Mr. Silverio. About I do some of those in Excel. You know, the Excel has the formula. If you put it correct, and it will give you automatically add you everything. But I don't know all of that. I'm still learning, and I want to know if they will be teaching all of this in the days going.
Thank you for the question, Andy. And yes, there are several templates actually that can be used. We also have some templates that we are putting together for the small businesses. There are templates, as you mentioned, in Excel that are very easy to use, and they have the formulas already integrated. So we have the templates available for you, and we're going to be sharing them with you as we go along during the incubation process. This is something that we want you to have as a tool that you will use. So most certainly you will have the opportunity to learn how to use them. Any other questions? Yes, Mario.
Sorry if I confused anyone. I shared a template that I found on the internet because I have been searching for something that works for a farm business. And, I've just been having a difficult time finding a simple template for that. So I'm glad to hear that you guys are putting together some templates that you're looking at. Because it gets very complicated very fast.
And this is why the terminology is very important, because the framework, right, the templates that you use, all the statements pretty much contain the same type of information, or their classification is the same for whatever business. These are standard business reporting systems that are used, and the only issue is for us to be able to understand how we account for the different assets, the different liabilities that we have, and how we actually record them and how we actually reflect them in these statements, right? But this is something that we will ensure that we share with you as we go along. And of course, we have multiple businesses, we have multiple sectors that are being represented here, so there are going to be different templates that we would have to use. No?
Thank you.
Very well. Yeah, if you do a quick search in Google, you will see that there are multiple tools that you can use. Several of them on Excel. You'll see several examples on PDFs. But as Mario has explained, no, there's very random. Very rarely will you find one that is exactly what you need. But it is about understanding what those components are and then how we can adjust whichever template we are using. There are different accounting softwares out there, Daisy Martinez is saying. Absolutely, Daisy. I think that we have, as Andy and Mario have explained, we have Excel sheets that can be used that are very basic. There's also different software like QuickBooks and others that can be used. But before you try to utilize any of these tools, I would ask you to understand the terminology. No? Because if you do not understand what you have to input, then you are not necessarily going to be having statements that you can utilize, no? Because they will come with those mistakes that you would have created there. So the first thing to do is for us to understand what the terminologies mean, and then we start to explore the different templates and see which one fits our businesses best. Very well. Any other question? If not, then as a last note, I would like to share some good news and tell you that we are going to be starting the face-to-face interactions with the different mentors. And we're going to be starting these immediately after the Easter break. And so we will be sharing the schedule of availability of our mentors with you. So they are each of the mentors are going to reach out to let you know how you can reach them and how you can schedule in for a face-to-face session. The face-to-face sessions are going to be available at Central Farm, and we will ask you to schedule the time because we have limited space, no, for that interaction, and so we wouldn't want to have different stakeholders reaching there and then clashing the different schedules, no. So we would want to be able to have the space and the time to actually listen to you and to help you out with your business. But we will be sharing the schedule shortly. We will share it through email so that each one of you will know when you can reach out and how you can reach out to your different mentors. Very well. Well, that is all from my side for tonight. I want to ask Inessa if you have any final words to share with our entrepreneurs.
I would like to thank you all. It was an awesome night. I'm very glad to have you tonight with us, and I count on you to get back next week. Then we can get through other types of questions and thematics and issues that we are going to handle. Thank you very much, Silverio, and have a blessed Easter.
Absolutely. Everyone, thank you very much for being here tonight. And as Inessa has said, a blessed Easter holiday to all of you.
Bye-bye. Take care.
Thank you very much. People, remember, don't go to the river tomorrow at 12 to bathe. You're going to turn into mermaids.
Okay,
Bye.
you
Thank
sure,
you.
Miss Donna?
Thank you for the
All
tip,
right.
Donna.
All right, then. Happy Easter, everybody. God bless. Bye-bye.
Same to you.
Thanks.
Okay, good night, everybody. Be
Good
safe.
night.
Bye.
Bye.